Hey there, golf lovers. Looking to step up your game? Let me tell you about Mollybox, the ultimate golf subscription box. Every month, Mollybox sends you a box packed with premium golf gear, accessories, and stylish apparel, all delivered right to your door. Imagine getting top-tier apparel and more, all handpicked just for you. With Mollybox, you'll stay ahead of the game and boost your performance. It's like having a personal caddy in a box. So why wait? Join the Mollybox family today. Head over to mollybox.com and use your limited time promo code ROGUE25, ROGUE, ROGUE 25 for 25% off your first box. That's mollybox.com.
Most bankers aren't ready to help you until after their third cup of coffee. But with Central National Bank's after-hours service, you don't have to wait for the bank lobby to open to get help. You can contact us from 6 to 8:30 in the morning or from 5 to 10 in the evening, and we'll connect you to a real, live, local person who can answer questions and fix problems 7 days a week. Bank different. Bank Central. Central National Bank. Member FDIC.
Everybody, welcome to What's Up Waco with Erica Boisvert, your local Waco agent. We are going to be getting into some good information about downtown Waco. We will also touch on the real estate market. That's the world I live in. Hey everybody, welcome to What's Up Waco with Erica Boisvert, your local real estate agent. Today, Jen Prisock is joining me from SWBC Mortgage, locally here in town. Which office are you working out of?
I'm over in Woodway at the Central Park Drive location.
Yeah, I like that. It's all easy peasy. And then you have title companies right there. It's all like one-stop shop. Very good. So Jen, thanks for joining us today.
Yeah, thanks for having me.
So we are going to talk a little bit to people out there if you're thinking about buying a home. One of the things I like to mention is, home ownership really is for everyone. I think there's been a shift in thinking where people are like, only super rich people can buy houses. Only really wealthy people can afford to do that. But I think that's not true at all.
No.
And homeownership is an excellent place to put your money. Real estate is always, always just a good spot to have your cash.
Always better than renting.
Oh.
Always a better option than renting. Yeah.
Right. I mean, you're going to pay a mortgage, right?
Right. You're just
pay your
somebody
own.
Else's. Yeah. Right.
Okay. And I think one of the biggest hurdles and a question I get all the time from all levels of buyers, first-time buyers, second home, is, oh my gosh, but my credit. So I know that you have a heart for this, for helping people increase their credit score and get to a point where they can purchase. But first, my question is, right now, to qualify for like FHA, what does that credit score look like?
So yeah, credit's always your first hurdle. So that's the main thing. No matter if you've got money in your bank account, any other work history, nothing. If you don't have the credit score, then we're at a stop. So for my company with FHA, 600 is your minimum mid FICO credit score. Now I say that in that you as a consumer are not going to be able to see the exact same credit score that I can see. And that's frustrating for consumers because everything that's out there that's free and available to the public is not the same scoring model that we use. But not that tracking is bad. You need to. But it's just know that you need to have a mortgage lender actually pull your score to see what the reality of it is. And sometimes it's higher, sometimes it's lower than what you're seeing on your end. But just that's the first step is have someone look at it to see where you're at and if you need work and what the next steps are going to be.
No, yeah. And I think that's an excellent point because I know a lot of people super rely on, maybe your credit card company offers a credit wise or something, or, everybody loves Credit Karma and they serve a purpose of monitoring.
Yes.
But like you said, a lender is going to pull a completely different set of numbers.
Right.
But so say that score again for a minimum
600.
for FHA.
Yeah.
600.
Yeah. That's your
amazing.
middle. So if you have 3 credit scores, Experian, TransUnion, and Equifax. If one of them is a 580 and one of them is 620 and one's a 600, then 600 is the one that we use because it's in the middle. So that's what we use for qualifying. So all of them don't have to be a 600. Just your middle one does.
That's awesome. And so if, let's say somebody comes to you and their middle one is a 580 and that's their lower, or mid, my bad. what steps can you take to help them get to, that 600 mark?
So as you said, I do have a passion for it. Someone sat down with me. My husband's actually my boss now, but and walked us through. And it took us a year to get our credit to where we could be to buy a house, but we were very diligent, and that was our goal, our end game. And so we got there. But you need somebody to tell you what to do. So
yeah, it's very overwhelming.
It is, and there can, there's all these different scams out there and credit repair companies, and you don't want to get messed with any of that. So you need legitimate advice. So if it's a credit score difference, it's not that much. We have different software systems, and then just my general knowledge, I can give you advice. Hey, pay this balance down, close this account, open a credit card, whatever it could be. Everyone's credit profile is going to be different. And then I can advise you on what to do and how long it will take.
And you can really customize a plan for somebody.
For each person, yeah.
That's great.
Because like I said, what's going to work for you, getting your score up is not going to be the same for mine. If it's a bigger difference, if your credit score's in the 400s, it's going to be a long-term plan. We work with a third party out of Dallas who has proven track results. You pay them, but it's not a credit repair, and they don't drag it out over months. So if they say we're going to get this done in 3 months, then it's almost on the dot. They email me back and say, Jen, so-and-so is ready. Her score is above, whatever the goal is that I gave them. And we've went through a lot of different companies over the years. And so this is somebody that we have stuck with for the last 2 years now because proven track records. But yeah, so there are people out there, but don't ever Google credit repair and end up, because they just draw it out. You pay, they know what you need to do, but they want the most money out of you. So they could realistically get it done in 30 days, but they're going to draw it out over 6 months so that you'll pay them a monthly fee for 6 months. So, but yeah, go to your mortgage lender first and see if they can give you some advice on what to do to get there. And so, yeah.
And then from that point, you're able to put together their approval. Like once they meet their goal, then you're able to put together that pre-approval and
go over their game plan. And also, if part of their approval may be that they need to save up money, or they need to pay off debt, or they need to go from a part-time to a full-time job, or something like that, or maybe there's other factors. So I can look at it and say, okay, if our goal is to get your credit score up to a 600 by December, then during that time, if you're wanting to buy this purchase house, these are things you need to do as well. So it's just, you have to have a game plan to know what to do, to be on track, to get there, because you can get there.
You can. I think that's the bottom line. It's doable.
And people just don't think that it is, or it's unrealistic. And so, but if you have your steps and you take your steps, then yeah, we want to help. That's the end game, right? We both want people to be homeowners because of all of the wonderful financial benefits.
There are tons of financial benefits. Yeah. I'm enjoying the financial benefits right now. It's been a good few years for homeowners. So what other advice do you find to be relevant? If somebody, let's say they come to you and they say, my monthly payment can only be XYZ. Can you help them, find a house that fits that, help them build a plan around it, help them put cash in reserve, like develop a plan to put cash in reserves so that they can have a higher down payment, lower monthly? Like, how do you handle that?
So as far as the first question, that is always something that I ask. A lot of people will qualify for more than what their monthly budget is. You don't want people to be house broke. They have guidelines for a reason, because you don't want 80% of your income to be just going to your house.
No.
So that's the first that we look at is, what is your monthly budget? And then I can give you the purchase price amount that's going to equivalent to that. So that way they can go to you, the real estate agent, and say, look, I need my monthly budget to be $3,000. Jen said that my purchase price needs to be, XYZ, so that you're not falling in love with houses that aren't within your budget. So you're actually going out there and looking at properties that that are in your price range. As far as putting a game plan, a lot of people, they want to qualify for more than what that is. So for example, if they say they want to pay $3,000 a month, but they want a $500,000 house, that doesn't equal.
Right.
So, okay, well, your options are putting a down payment, getting a gift from a family member. Do you have anything you can liquidate or sell? So we'll go through the options there so that they can get,
so they can get what they want. Yeah. And I really like what you said about not being house poor. That's super important to me. I've got clients that I've talked them out of the higher priced home Because when you're out there looking and you see a house and you fall in love and you're like, maybe I can do $300 more a month. And then I'm like,
Right.
can you though?
Yeah.
Comfortably?
Well, I mean, family emergencies happen.
Yeah.
Anything that, and then the way property taxes are going, you have to prep to know that they're going to go up next year. So the monthly payment that you have right now is not going to be the monthly payment you're going to have for 30 years. So
yeah, that's a shocker for me in Texas.
you have to prep for that inflation that's going
Those
to happen.
property taxes.
Yes.
Yeah, that's new. I was like, oh, every year that changes. Okay. So if you're moving from out of state and you don't have your property taxes assessed annually, prepare yourselves for that.
Is it different in other states?
Yeah. The state we moved from, the state that will not be named, it's assessed upon sale. They reassess property taxes for the new owner.
Stays that way until you move.
Mm-hmm.
That's interesting.
And there's a lot of like supplemental things that happen, like if sidewalks need to be put in a neighborhood or lights or things like that, they'll have a
reassessment. Right?
They'll reassess for a supplemental tax with a finite time limit.
Okay.
So you'll have that additional tax for like 5 more years and then it's done. Yeah. So that's a big adjustment.
Well, and really, I mean, it's off topic, but with property taxes in McLennan County, we've been here. There hasn't been a much jump, but
until recently,
as this year. Yeah, this was the first for everybody. People who have lived here forever and had a 50% increase in their property taxes. And before we were going up maybe 3 to 5% every year. It was very minimal. So
and which is in track with what am I trying to say? Equity values. Yeah,
right. Yeah. So but it's just something to prep for as far as your budget and knowing that home insurance costs are going up. And, I was told by a home insurance company this morning that they are starting to be on the rise. So you want to be safe with your budget.
Yeah.
So,
definitely need a cushion. And being house poor is no fun.
Yeah.
Like you live by beautiful lakes. We're surrounded by beautiful waterways. Like you want to get out there and, have the jet ski or find a paddle board or something fun. Have fun. Go on vacation. Enjoy your family. Go out to dinner. Like even the little things, ordering pizza sometimes is a luxury, But I think that's a good point. I'm going to check out because you said something and now my brain just went.
Of another topic or because I
property taxes. Okay. No, I just want to go back to that for real quick. So renters or anybody considering buying, like don't be overwhelmed by property taxes. Jen kind of touched on that. It's just one of the costs of living and you get used to it and it fits into, what you're planning for every month. And I want you to know if you're renting,
you're paying somebody else's property taxes.
Yep, exactly. She read my mind. You said exactly what I was going to say.
So you're still having to deal with the issue. When they're raising your rent, that's usually why, is because, they had an expense increase. So they have to pass that on to their renters. So,
right.
Yep. You're still having to deal with it. It's just going through somebody else.
Right. And then you can't write it off.
Right.
And,
yeah.
You know what I mean? Because then it goes into your landlord.
Yep.
So lots of benefits of home ownership and definitely something that is achievable for everybody, really. Some people, it might take a little bit longer. It took us a long time to get ready, especially after moving and depleting our reserves because moving cross country is it's a big one. It's expensive. And so it took us I want to say just a couple years once we got here. So having a good plan and having a lender who can support you and help you figure out the steps that you need to take is super important. And I found that in you. You're very diligent with your people. And I also like, your communication with me too, like on this end to say, hey, here's where we're at. So the partnership is great. So if you're looking to buy a home, you do need to find a lender like Jen who's having those conversations with you and keeping your agent involved. It's really important.
Yeah. And even if it's not me, that's the benefit of having a local lender.
Yeah.
Versus if you apply online to big banks, 1-800 numbers, you're just going to get a letter in the mail saying, no, you're denied. And that's all you're going to get. So having that local relationship, like I said, even if it's not me, that's someone that will go through everything with you and you can come to their office and sit down and talk with them, pick up the phone and say, hey, this changed with my credit. Is this good or bad? Hey, if I do, we're thinking about selling the car. Do you think this is a good idea? Do you feel like I should, having someone to bounce those next steps off of as things change. It's a great.
Well, and it's always you too. Like they can literally call.
Right.
You can literally pick up the phone and say, hey, Jen, what about this?
Yeah.
The big banks that you touched on, I mean, you're a number. You get somebody answering in customer service, maybe not necessarily always the same person.
Right.
You know, and I don't have anything against teams. You know, it works out. But it is nice to work with somebody local and to have that direct connection.
Mm-hmm.
And it really, really, really smooths out the process when you are under contract.
And you have someone you can text.
Yeah.
Right.
Yeah. Or, you know, it's 8:00 at night and you're like, oh, shoot, I'm sorry. Tomorrow this is happening. Can you help?
Yes.
It's just a different level of service.
Right. Well, and I'm seeing that in my world because before me being in mortgage, I had no idea. So, you know, you just don't know what you don't know until you get into it and you're like, wow, the level of service that you get can be so different. Yeah, so much
different.
So,
that's fair. That's a diplomatic way of putting it.
There's a lot of things to look at when you're choosing a lender. So,
yes.
Pricing, service, all of that. So just factor in everything.
And connection, because we work with y'all in like the most stressful moment of a buyer or seller's life. I mean, it's as much as you do to mitigate the stress and lessen it as much as possible, there's no way to completely escape it. Moving is stressful.
Right.
Handling this huge amount of money is stressful because most people do it maybe 2, maybe 3 times in their life. And everything changes. Like, you know, if you're asking your dad what it was like to buy his house, it's just irrelevant. None of that matters anymore.
Yeah. It's so different, especially in the mortgage side.
Oh gosh.
Mortgage reform that happened. But
and
it's a lot of numbers and it's a lot of money. And so, yeah.
And a lot of moving pieces. And then on top of that, you have to pack.
Which my family of 6 would take us forever. So,
my gosh.
No way.
I think we left half our stuff.
Yeah. It's just to the point where like, we don't need it.
Yeah. Just get a dumpster and a moving truck and you're good. Very good. Are there any other points about credit that you'd like to mention to people?
Yeah, I think, so credit score is important. Not just with buying a mortgage, but just any type of financing needs.
Yes.
What comes in a credit score is the amount of trade lines as in accounts that you have open. So your credit score is like a pie, and each piece of the pie, if you don't have a credit card open, you cannot gain any points in that piece of your pie.
Okay.
So a lot of people will come and they like only have an auto loan or they only have a student loan and that's it. And you're going to be stuck. You hit a ceiling.
Okay.
So you need to have a credit card open at all times and you need to keep the balance. I suggest 10% of whatever their limit is. So if they gave you $1,000 credit limit, you need to keep your balance at $100. It does not need to be paid off to zero every month.
See, and I think that's
a misconception.
It is, and I'm glad you're mentioning that.
So if you are trying to build your credit, now if you are not planning on purchasing a home, you probably, but this is why you're listening to this podcast, is because you're interested in all the things that Erica has to offer you with home buying. So you want to find out when your credit card company reports to the bureaus. So if they report to the bureaus on the 25th of the month, then you want to make sure on the 25th of the month that your balance is where you need it to be, which is, again, if that scenario is $1,000 limit, you want to make sure your balance is at $100. If it is at zero and they report it to the credit bureaus as zero, the credit bureaus are not seeing what you did all 30 days. They're not seeing that you racked up a balance. They're not seeing that you paid on. They're just seeing a zero balance. So they don't know that you can handle credit well.
So it looks like you're not using it?
Correct.
Okay.
So find that date out. I have it in
How do you find out?
You call them. I have it in my calendar. It's set up on my calendar every month. Now it's on auto draft as far as when I pay it. But like if I rack my credit card up a little bit higher that month, I need to make sure by that date, just like I have in my calendar when I need to pay my student loans.
Okay.
And you know, when the date is that I need to do that. So that is important. Is if you're trying to build your credit, you need to have a low balance. And yes, paying it off every month is great, but do it after it reports to the bureaus.
Okay. So you said that's one piece of the pie. So what else is important to fit in there?
Installment loans. So that is where that's a mortgage, a car, a student loan. Okay. What are the furniture type loans that you can get? You know, you go buy, you know, those types of things. Where it's basically like they gave you $6,720 and you're just paying the balance down. A credit card is revolving and that's up and down, up and down. Your balance changes all the time. So that's a big part. You need to have at least, you know, one of each category open. Okay. People tend to have more installment loans just because you're naturally going to have a car or something like that.
Right.
The other part is obviously paying on time. That's huge. If you have any type of federal debt, please do not ever pay that online, because that does the biggest damage to your score. So
Federal debt, like IRS things, or
student loan, like government student loans.
Oh, okay.
Those probably hit the hardest. If you pay a government student loan late, it's going to just tank it.
Really?
So that's why right now, here's a credit tip going off. Everyone's student loans are in deferment.
Right.
You need to know when they come out of deferment so that your auto pay picks up the day that it does.
Okay.
And you pay it, because I worry about that.
Really?
No one's been thinking about it.
No, yeah. It's been done.
A year or two. You know, we're still making payments on ours because it's the opportunity to pay it without the extra added interest. But when that deferment comes up and people aren't aware, and then all of a sudden their credit score is going to start dropping because they're not paying their student loans and they forgot about them. So just know when that is, and make sure that your auto pay or whatever you have set up gets picked back up that date, because I think it's in the fall of this year.
Now I'm going to look it up again. So that's interesting that a federal will hit harder if it's negative.
Just like a mortgage. If you pay late on a current mortgage, it's going to affect you pretty bad. So
nice. Okay,
just
good to
pay
know.
everything on time in general. The minimum payment if you can.
I mean, in this world of auto pay.
Yes. Just get everything set up. So that's huge. The balances that you have on your credit card, which we all talked about, that's another piece of the pie. It's called your utilization ratio. So that's really big. That goes into your credit score, making sure that you're not maxing everything out. And again, if you maxed it out, you're moving and you put everything on a credit card, that's fine. Just make sure before it's reported, it's not maxed out.
Okay.
Because then that's going to affect your score whenever they send it to the bureaus. So
good to know.
Just why your credit score changes all the time. It's always fluid.
I think that's what people don't realize either, is that it's always fluid. I think people think, oh, I've got a 680 today. Yeah, I'm going to have a 680 tomorrow.
Yeah. Well, and that's what, when you shop mortgage lenders, or even if you're shopping for a car or anything, you want to do everything on the same day, because your credit score could have changed from 4 days ago to today, from when another person pulled it and I did.
Oh, yeah.
So if you really want apples to apples when you're shopping around, do it all on the same day.
So your credit score is the same that whole day.
And so that's really a good comparison. Yeah.
Okay. So I want to switch gears just a little bit.
Go for it.
And talk about, are you noticing some changes in the market right now?
As far as?
Just any, how things are moving. Have you noticed a slowdown? Are you feeling any of that?
I did a couple months ago.
Okay.
But my June and July are just as busy, I feel, as normal. So I feel like me on my end, so I obviously don't negotiate sales contracts. I'm not, finding the properties, but I see the contracts when they come to me.
Yeah.
One thing that I like that I'm seeing is people are now, this is for a buyer standpoint, right? Because those are my clients.
Yes.
Is people are going under asking price.
Okay.
And sellers are paying what's called seller concessions, as in the sellers are offering to help pay some of the buyer's closing costs.
Yes.
Which for a while,
it disappeared.
Seeing that. It was the buyers were coming to the table and saying, I will give you my left kidney if you will let me buy this house. And they were paying for the title policy, and they were paying for the survey and all this. We've been in our house for 3 years, and when we bought our house, we went under asking price. The seller paid for the survey, closing cost, title policy.
Oh yeah,
it was a lot of that, and so now I feel like it's nice for my buyers, for me to be seeing contracts coming in that way. It makes me really excited for them, because that gives more buying power. So I'm not in the place to say if it's a buyer seller's market, but I do see a shift in that. It's calming down. Now, yes, interest rates have increased. But what I try to tell people, especially if they're first-time home buyers or they've never bought before, we're really back to normal rates of what we were 5-6 years ago. During COVID time, that was an anomaly. So that wasn't normal, and that was great.
Right,
obviously, if you were able to take advantage of the rates during that time. But right now, people are like, oh my gosh, we're 5%. I'm like, yeah, but we were at 5% 4 years ago. So,
right.
And we've been higher,
I was going to say, this is one of the times where I'll be like, yeah, go ahead and ask your dad.
Yeah. What his rate was.
Ask your parents 18%? What their rate. Yeah. Right. 18, 19.
Yes.
I guarantee. But that's kind of cool, because I think like with the rates coming up and with sellers being willing to cover some costs, it's kind of leveling out on the front end.
Right.
for people
and we
in
still
a nice way.
have different state and local programs to help cover down payment, closing costs, you know, for our buyers. So those programs are still out there. They went away for a little bit, but they're still out there. So
Are you still, so some of the down payment assistance programs I know were like paused.
Yes.
Are they starting to come back?
Yep. Yeah. So those are related. The state programs that we use at SWBC are based on the bond market. And so there was some, you know, things going on
Volatility
there.
there.
That has nothing out of my control.
Right.
So yes,
the stock market went crazy,
hold.
y'all. Can't control that.
Yeah, not at all.
It lost its mind.
So now the we can't get you as much. There for a while I was able to get people to cover almost everything.
Right.
But I can still get all of your down payment covered, or I can get all of your closing costs covered. You know, so we can still, there's still that help. There's programs are still, they're still out there. And then even the city of Waco has opened theirs back up, and theirs was shut down for a long time.
Okay.
So those are small little grant programs that they offer. You just have to ask. And so I think a lot of people have a stigma of, I don't have any money.
Mm-hmm. Yeah, people see that as a roadblock for sure.
No, but we closed this week and someone got a check back at closing. So like they didn't have to bring 20 grand, you know, to buy this house. So that's what I like in the shift that I am personally seeing for my buyers.
And with those down payment assistance and grant programs and things like that, you're still able to watch the monthly and still kind of keep that comfortable for people.
Yep.
Which is excellent. I think that's overall, if you are thinking about buying a home, find those ways to make it work every month and be comfortable and prepared for the future, because changes are inevitable.
Right.
But yeah, so I mean, it's still pretty much a seller's market, I would say, but it is starting to level out, and I'm kind of digging it because same as you know, I represent probably 60% buyers, 40% sellers. So with my buyer's agent head on, I like seeing that, you know, sellers are contributing. It's really nice. It's still weird to me that they'll pay closing costs. When I moved here and first got into real estate, sellers were like covering $6,000, $7,000 of closing costs, which blew my mind because the state I moved from, that wasn't even a thing. Multiple offers were like were already the game we were playing.
Right.
And so my mind was blown. So then when it shifted to sellers not covering anything,
like normal, right?
I was like, oh, I know, I live here. This I get. But now that it's switching back, I'm so happy for people who are buying.
It's all negotiations.
And it is. And you know what? Now that things are kind of leveling out, there's fewer buyers out there because of the rate changes. Fewer buyers can afford, you know, maybe what they could afford last year. So the people who are still in it to win it, to also not have to pay title or, you know, some of those other costs that come up with the loan, it's great. It's really nice. And it shouldn't be so one-sided. I mean, even with my listing agent hat on, I'll get that stuff for my seller, but you know, part of me is like, oh.
Well, and me being an advocate for real estate agents, you use a real estate agent, because I see contracts where no agents are involved, and it is extremely one-sided. Always. It is always one-sided. And so you need to have a realtor that represents you and can help negotiate those things, because it should be a give and take. I mean, so.
I mean, an excellent negotiation. Everybody walks away from the table feeling like they won something.
Yeah.
You know?
And then you need a mediator to be able to do that, even if it's a family member. So.
Agree. Well, excellent. Any other credit tips that you can think of? You've given so many, and I'll probably try to list them in the show notes.
Yeah.
But if you can think of anything otherwise.
Okay, because this came up recently.
Okay.
If you were about to purchase a home and you go to Credit Karma and you see a bunch of collection accounts that you don't recognize, or everyone says, I don't know where it got started, but that you should just dispute everything.
Oh, yeah.
And there's a way to, you know, click on the buttons and dispute it. So disputing, what that typically does is you're disputing that this is not legit. And so that third party helps you to gather the paperwork. There's a whole process to it.
Okay.
But on my end, it's not good. One, disputing things does not help your credit score. So it won't do anything.
Even if it resolves it.
Well, after if it resolves it and they can actually take the trade line off, then yes, but that's like 90 days. So,
okay.
But a dispute on our end, when we're looking at it, there are certain loan programs that say, oh, we don't know if this collection account is actually yours because you're disputing it. We don't know what the results of it are going to be. So we have to count a payment as if you're going to have to pay that or not.
Okay.
So, and that's typically with like FHA. And so that's why I say just don't, one, you know, you doing that so short, you know, like you're going to go dispute everything and then go apply for a mortgage.
Mm-hmm.
And if you don't plan on applying for a mortgage for a while, then sure, go ahead and start tackling those things. But yeah, just, it's not going to, while you're disputing it, it's not going to increase your score in time for me to pull it. And then there are certain there are certain loan programs that have guidelines regarding what to do with a dispute, and it's not in your favor.
Okay.
So talk to your lender before doing anything like that with your credit.
So short-term disputing may not be the way to go.
Correct.
See if that works out as part of your plan.
Yep.
Or not.
Yep.
Okay, cool. So one thing I want to say before we head out is that I love local, big fan of local. And I do know out-of-state lenders, and I love you guys. I really, really do. And I do still recommend, because I think that it's also personality, because it is stressful. Like, you really need to connect with the person you're going to work with. Same with a real estate agent. Like, if I'm not your person, that's fine. There's great people out there. But I do enjoy local as opposed to big bank. Mm-hmm. Or 1-800 numbers, or a quick online application. So for anybody listening, definitely I would reach out to Jennifer Prisock or some other people in town as your jumping off point, and see what can be put together. You definitely have a lot more access to a local lender. And I think you're, you know, like, you have somebody on your side, somebody advocating for that loan and helping you figure it out.
Because we want you to get the house. Yeah. So we're going to fight and come up with plan A, B, or C. Mm-hmm. Or D, or however far we have to go down the alphabet.
Or maybe 2 years from now.
To get you the house. Yeah.
And home ownership is great. And sometimes it can happen in 3 to 6 months. And sometimes it does take, you know, a couple of years for it to be really, really perfect. But if you walk away from this podcast knowing anything, I hope it is a little bit better understanding of how credit can help, and what you need to do to fix any credit things that may be on your record. And also that homeownership is really a positive thing, and it's attainable. It's super achievable if you put your mind to it and really are diligent about finances and finding people who can help you navigate the craziness of the credit game, because it really is.
Well, it's just because it's not, I mean, no one knows about it.
No.
So it just seems like this big mystery. And so that's why I put all of my education into that, because it's just not taught. So
it's really not. And it's super important for so many, other than mortgage. I mean, for auto loans, all the things that we need to do.
There's, I mean, renters, they check your credit score. I mean, just anything. So yeah.
Very cool. Well, thank you for coming out today.
For having me.
I'm glad you came.
Yeah, it's great.
All right. Well, thank you, everybody. We will have Jen's information in the show notes for the day. What is the best way for them to reach you? Just
usually my cell. So it's 254-715-5944, because you can call and text. As I mentioned, I have 6 kids. And so, but I do work nights and weekends. But if I'm, you know, giving baths, then I'll call you back. So, if we're doing bedtime and stuff. But yeah, I'm still available. That's the best way to reach me.
All right. So get Jen by cell. And she just left her number. You want to say it one more time?
254-715-5944.
And as always, you can catch me on Instagram at Erica Sells Texas, or on Facebook, same handle, at Erica Sells Texas. Here to help you with your home buying and selling questions. Jen, thanks for coming by today. Bye. Do you have a topic you want to talk about? Do you have questions about Waco, the real estate market, how to sell your house, what to look for when you're buying a home? Send me an email, ericasellstexas@gmail.com. Shoot me a text, 254-447-0180. Happy to chat about it. Find me anywhere you listen to your podcasts, or at roguemedianetwork.com.
Hey there, golf lovers. Looking to step up your game? Let me tell you about MullyBox, the ultimate golf subscription box. Every month, MullyBox sends you a box packed with premium golf gear, accessories, and stylish apparel, all delivered right to your door. Imagine getting top-tier apparel and more, all handpicked just for you. With MullyBox, you'll stay ahead of the game and boost your performance. It's like having a personal caddy in a box. So why wait? Join the Mollybox family today. Head over to mollybox.com and use your limited time promo code ROGUE25, ROGUE, ROGUE 25 for 25% off your first box. That's mollybox.com.